Bitcoin is gearing up for its biggest move in a decade, and the data shows it's primed for takeoff.
Right, I've had conversations with heads of large sovereign wealth funds that said, if America's buying Bitcoin, we're buying Bitcoin.
In this video, I'm breaking down 3 of the most accurate indicators in Bitcoin's history. Tools that have nailed every major top and bottom across multiple cycles. Through the years, experts have tried to nail the magic recipe for selling cycle tops only to rebuy back in the depths of the bear market for exponential gains. Many have tried, most have failed, but you're in good hands. Don't worry, Crux got you covered. Stay tuned, or as we like to say here, it's time to ape into some alpha. If you're new here, welcome to Alpha Bros, the ultimate pit stop for Web3 wisdom. Like and subscribe to make Pup Tux's day. He's earned it. Now Bitcoin, what a year it's been to say the least. Much more volatile than any of us really expected. From wars to tariffs to institutions and banks aping in. It's been difficult to navigate. And before we dive into the top 3 indicators you'll want to add to your arsenal to time the cycle's top, we need to talk about the M2 money supply and how it's quietly setting the stage for Bitcoin's next big move. This is the first Bitcoin cycle where the global M2 money supply has clearly shown its power, consistently front-running Bitcoin's price action with insane accuracy. And as we head towards what could be the cycle top, I genuinely believe the M2 is the most overlooked indicator in the short term. For those unfamiliar, the M2 money supply tracks the total amount of liquid cash in circulation, including savings, checkings accounts, and easily accessible funds. In simple terms, it's a fuel tank of the entire global economy, and markets tend to move right after it gets filled. Raoul Pal found that when you shift the global M2 about 3 months ahead of Bitcoin's chart, the correlation is eerily accurate. And it makes perfect sense. The more liquid capital flowing around the world, the more money floods into risk assets, and crypto is on top of that list. It's not a coincidence. Big shout out to Colin Talks Crypto as well. He's done deep dives on this exact correlation, plus several of the indicators we're about to break down. Make sure to drop him a follow, link in the description below. So, this is where most people get left behind. Make sure you're not one of them. Like, subscribe, and turn on notifications so you don't miss when I share exactly when I'm planning to sell this cycle. Timing the top can be life-changing, and if you've ever wondered how top analysts buy the bottom and sell the peak, these 3 indicators are the reason why. First up is the Pi Cycle indicator. And no, unfortunately, it has nothing to do with dessert, but it's been pretty sweet at calling tops. The Pi Cycle indicator tracks the relationship between 2 key moving averages, the 111-day and the 350-day multiplied by 2. When the shorter term moving averages crosses above the longer one, it has historically signaled a market top every time within 48 hours. Sounds crazy, right? Check it out. In 2013, the Pi Cycle indicator flashed on April 11th, just 1 day after Bitcoin peaked on April 10th. In 2017, it hit perfection, signaling a top on December 17th, the exact day Bitcoin reached its all-time high. Then, in 2021, it went slightly early, flashing on April 12th, just 2 days before Bitcoin's first major peak. 3 cycles, 3 near-perfect calls. And if you would have sold any during this period, you would have been able to scoop up Bitcoin at 70% off discount just a year later. As of now, the 111-day moving average is still trailing behind the 2 times 350-day line. And if this trend continues, we could see that legendary Pi Cycle indicator crossover flash sometime around October to November of this year. And if history repeats, this is our signal to start scaling out. Let's talk RODL. And no, that's not a typo. This one's one of the cleanest indicators for marking retail-driven tops. RODL stands for Realized HODL Ratio. It compares how much value is sitting in freshly moved Bitcoin, less than 1 month old, versus long-term holders between 1 to 2 years. In simpler terms, it tracks when the smart money is sitting tight and when the new money is flooding in. When RODL spikes, short-term holders are dominating the market, and that's usually the final phase of euphoria before a major top. If RODL's flashing red, it usually means everyone and their grandma just opened a Coinbase account. Here's the historical data. In 2013, RODL spiked in early November, just 2 weeks before Bitcoin peaked on November 29th. In 2017, it surged into late November, with the top hitting on December 17th, less than 3 weeks later. But in 2021, Bitcoin peaked on April 14th, and for the first time, RODL didn't spike into the red. This marked the first major deviation of the pattern. As of today, the RODL ratio is sitting around 3,000, still well below the red zone levels we've seen in the past 2 of 3 tops. In 2013, RODL ratio spiked just below 200K, 2017 just below 100K, and in 2021, it hovered near 14K during the April peak. By comparing the value held by newcomers versus long-term hodlers, the next red zone is sitting around 50,000, and if the momentum continues, we could enter that zone sometime around Q4 this year. Make sure to subscribe so I can let you know when we enter that profit-taking zone. Sitting and waiting to lock in profits is the hard part, but if you're trying to catch short-term plays in the meanwhile, that's exactly what Alpha Gems was built for. This gives you the edge you won't find on Twitter. Inside, you'll get access to Q&A sessions and a watch list with those hidden gems before they trend. You'll also get access to our VIP trading group, now over 450 traders strong, dropping real-time trade alerts, buy and sell calls from a squad of seasoned pros. Bros Academy will train you from rookie to pro, covering everything from trading strategies to project analysis. Plus, you'll unlock access to one-on-one portfolio audits. I've already sat down with over 150 bros and walked them through what changes I'd make in their shoes. If you're ready to stop guessing and start moving with precision, hit that link below and use code BROS10 to lock in 10% off your membership for life. And now, the final indicator before we put all 3 together, the Puel multiple. This one tracks how much Bitcoin miners are earning compared to their average over the last year. When miner revenue spikes way above the norm, history shows they usually start selling off hard, and that's whenever a major top happens. Technically, it's the ratio of the USD value of Bitcoin issued to the 365-day moving average. In simpler terms, it shows when miners start printing money and when they're likely to cash out. In 2013, the Puel multiple shot above 10 right before the top. In 2017, it crossed just 8 days before Bitcoin peaked. And in April 2021, it touched 4. Not as extreme, but still bullish enough to signal warning signs. As of today, the Puel sits around 1.4, meaning we're not in danger territory yet. But if it starts climbing above 3.5, it could mean minor pressure is coming in, and history says that that's when things get volatile fast. Now, here's where it all comes together. All 3 of these indicators, the Pi Cycle top, the RODL, and the Puel, have all nailed tops on their own. But the real power, it's when they all start flashing at the same time. My plan is simple. I'm tracking all 3 of these indicators in parallel, not relying on any single indicator, but looking for that moment when they converge. When Pi Cycle crosses, RODL enters the red zone, and Puel pushes above its danger line, that's a signal I'll be watching to start scaling out of major positions. No hype, no guesswork. Just data-backed exits when history starts repeating itself. So stay locked in. I'll keep you updated every step of the way. Quick wrap up. When it comes to raw price action, nothing beats Pi Cycle indicator. It's called every major Bitcoin top within 48 hours. But technicals aren't enough. That peak retail FOMO, it's one of the clearest signals to start locking in profits. And that's exactly what RODL tracks. Then there's Bitcoin's halving cycle, the heartbeat of every bull run. And that's where miner behavior comes in, which Puel multiple helps us front run. So when you stack these 3 together, price action, retail euphoria, and miner exhaustion, you've got one of the most complete take profit strategies in crypto, developed by none other than yours truly. And for the short-term moves, don't forget to keep an eye on global M2 money supply. Liquidity leads, Bitcoin follows. That's all I've got for you today. Show some love with the like, sub if you haven't already, and ring that bell so you never miss the next gem. Thanks for watching, and here's another video to keep your vibes up. I was your host Crux, signing out. Be patient, keep persistent, stay alpha.